As winter approaches, what's the outlook for European natural gas prices? Welcome to Market Insight. I'm Ludovica Brignola. Well, Europe was lucky to have mild weather in the last two winters that really helped overcome the abrupt halt to Russian exports of natural gas. But is that likely to continue this winter as well? Well, to help answer all that and more, I'm now joined by Bryan, Principal Associate of European Gas Research at LSEG. Thank you very much for being with us today. Wayne, so there's some optimism there to start with in your outlook for Europe this coming winter. I mean, storage levels are pretty high still, right? What's your outlook?
Yeah, well, there's a lot of uncertainties ahead this winter, especially with the loss of the Russian transit gas likely to happen in the new year. We've got obviously robust production from Norway. LNG supply we forecast a little bit lower this year due to a slowdown in LNG supply growth that will actually pick up from late 25, early 26. Weather's really going to be one of the key issues this winter. We've had a couple of mild winters, but this year the uncertainty certainly is around the weather. And of course, in the background, we have the simmering geopolitical tensions, which are underpinning prices, of course, and causing a lot of volatility. So there's a lot of uncertainties ahead this winter.
Right, and we'll get back to that as well in a few minutes. But regarding demand destruction, we've seen quite a lot of that happening right in the UK, in the rest of Europe. I mean, do you think that will continue in the UK? And what about Germany, for instance? We are seeing problems in the German economy.
Well, in terms of Germany, when you talk about demand destruction, in terms of heating demand, yes, we saw strong levels of demand destruction over recent years, but we think that is going to slow down a little this year. And I've mentioned before that when prices were at their real peak, people were sacrificing comfort over price. So it's very cold, prices are too high, I will really neglect putting my heating on or come up with some sort of ingenious way to heat my home without having all my radiators on, etc. This winter, if the prices stay in the lower ranges and we do get a prolonged cold spell, we probably would expect to see more price over comfort. So they would actually take the price, thinking the price is lower. I'm actually now looking to more comfortable. So comfort over price, sorry. So we see that happening this winter if we get a prolonged cold spell. And we've seen from the numbers actually based on wind speeds, temperature, etc., that demand destruction is indeed slowing in the UK and also in Germany. But in Germany, you mustn't forget the messages are very strong from the political side of things. They're still giving warnings, even though the German gas storages are full, they're giving warnings of potential shortages. So they're a lot more on top of the sort of messages than we are here in the UK. But again, I think in the UK, like Germany, we might see a slowdown in that.
And that seems to be some comforting news, at least on that front. But speaking about price, right? I mean, we've seen UK natural gas futures, the price doubling since the beginning of the year. Why? And what's the price direction in your mind?
Well, in terms of prices, yeah, you're right there. We've seen, especially at the start of this week, both the UK and the continental TTF prices have hit yearly highs on the spot market. We haven't seen prices higher since last December. They've come off the last couple of days a little bit, but one of the main reasons is, firstly, the market balance is a lot tighter this winter. In the event of a cold spell, we probably need to raise the price to attract some LNG. Furthermore, we've got geopolitical tensions that are bubbling away in the background, and they're underpinning the price volatility. And the market's quite nervous ahead of the winter season, despite the storages. And in terms of moving forward, we've put a price range of between 37 to 48 euros per megawatt hour as an average day-ahead spot price over the winter period. Normally our range wouldn't be that wide, but there's several different scenarios and how things could play out. So that is our view for this coming winter, but you could see it shoot a lot higher if there's a confluence of events on the geopolitical and the supply side, which would really, send prices skyrocketing, but not to the levels we saw in September 22 when we hit 330.
Right. Because of what we've seen happen in Russia, what's happening even now, it's quite important to also look at Norwegian, Dutch, and obviously UK gas production. How are these looking?
Norway, yeah, our most reliable gas supplier, doing well. We forecast supply to be pretty flat this year, but again, they're a reliable supplier. Since we lost the main Russian hydrocarbons, what we've seen now is the Norwegians step in with a lot of consistency. However, they have contributed a little bit to the volatility with an extensive summer maintenance period where they take out a lot of the facilities for their annual maintenance. Some of them were delayed, revised, lengths changed, capacity cuts changed, so that's also fed into the volatility. But overall, they're a very reliable supplier. UK, we are now seeing dwindling UK gas production. investments falling. The change in government certainly had an impact, with Labour not really looking to grant any new licences. There's a couple of large projects that the previous government had actually greenlit, and then now with Greenpeace are taking these producers to court, and they're trying to oppose these huge gas fields on the basis of the carbon as a byproduct it will produce. So a lot of concern around there. So declining production for the UK, and very similar for the Dutch. I mean, Groningen's closed now. The production is really, really minimal compared to the massive 80 BCM we saw at the start. So.
Not a great outlook there. And you've spoken obviously a lot about Middle East tensions right now, but just a final point really, because a lot seems to be really depending on the weather. I mean, is there anything suggesting at all that we could have another mild winter or not?
Well, with the weather, I mean, you look at these forecasts at the moment, you've got this 46-day forecast, and that's looking quite mild at the moment. Some of the signals for later on in the winter could indicate a potential cold spell from the end of December through to February. That's when the likely cold spell will hit, if I look at the telekinetic signals and speak to our weather researchers. But again, this weather can change so quickly, it's far too early to say, are we going to have a cold spell? How long will that cold spell be? And that's another reason why we have this risk premium in the price, due to the fact we've got a much tighter supply-demand balance. We're part of a global market now, so anything that happens, like US hurricanes have impacted the price, geopolitical tensions. Don't forget the last transit point through Ukraine. Even though Ukraine took that part of Russia, you've got this Sudzha metering point. The gas has been flowing every day, same amount, despite what's going on around that area. So, yeah, there's a lot going on, and like I said, expect prices to be on a up and down ride over this winter, depending on news outbreaks, supply issues, weather. So yeah, expect volatility to continue.
A lot of volatility ahead then. Bryan from LSEG, thank you very much for being with us today.
Thank you.
And that is your Market Insight. Don't forget you can watch more videos on Reuters.com.